Joining us this morning here at Post 9, RBC head of U.S. equity strategy, Lori Calvasina. Lori, it's great to have you.
Thanks for having me.
Explain how this fits in with your overall thesis right now regarding equities.
So our target on the end of the year is 4,250. We've said there's a wide range of outcomes. Some of our models get us up to 4,700 or higher. Some are a bit lower. But generally, we kind of feel more neutral on the market, and we were a little bit more constructive at the beginning of the year. And so we have been concerned about this seasonal kind of September-October effect. I feel like we're in a little bit of an information vacuum at this point in time. We don't really know what the new narratives are, so it's been difficult for the bulls to have anything to latch onto. And now we're seeing really the stalwarts and the engines of the market. It's just a plain old-fashioned, crowded, overvalued trade. It needs to correct. It's got a ways to go. I mean, if we have a few more days like this, we're going to get there pretty fast. But it's just something that needs to happen. The leadership is tired.
Right. You're an old tech hand, yes?
I'm small cap, so more on the small cap side.
Okay, all right. Have you been questioning some of the longevity of some of the large tech models?
So, look, what I will tell you is I grew up in the aftermath of the tech bubble over, at a different firm and sort of lived through that. I've always been scarred by that experience. So I look at tech today and I try to be really unbiased. I try to be really rational. I think that it is crowded for a reason. I think we're staring down the barrel of sluggish economic growth for a while. That is the price we pay for the economic resiliency now. So it's crowded and overvalued for good reasons, which kind of make what we're going through very difficult intellectually to grasp. So I think there is going to be an opportunity in here for longer-term investors to come in and buy this stuff. It is going to require a strong stomach. It is going to require some patience, and I can't tell you it's going to turn around tomorrow. We've got big problems on valuation and crowding that we've got to get fixed before the fundamentals can take over again.
So if the market loses tech as its leadership group, then can the market hang in there?
Well, I think that's exactly the next logical conclusion. I said to one of my traders this morning, we were sort of talking about energy and how they're starting to think that's getting to be a little bit of a tired trade. That's been one of the more recent leadership areas that's suddenly done well. Our commodity strategists are saying, maybe we have some consolidation. Well, if value's starting to weaken at the same time that the growth leadership is starting to weaken, you're going to get a day like today where the defensives are starting to prop up or come to the top of the pile in the sectors, and they're just not big enough to sustain the market. So you're going to have some consolidation in the broader market if growth and value are both losing some of their luster at the same time.
What is your favorite defensive play if you're nervous about some of this stuff?
So we've said healthcare, and it's got more reasonable valuations than what you've seen in utilities and staples. I think staples has a pricing issue. Our analyst has been very negative on kind of the idea that pricing is going to hold up in that sector longer term as consumers become pickier and choosier. And healthcare, it's got reasonable valuations, especially on the pharma biotech side. There is a growth component there. It's benefited, I think, from the labor backdrop easing. We're seeing a nice rate of upward revision improvement there, especially on things like providers and services, which have been hit by labor. It's not the most exciting story, I'm not going to lie, but it's sort of the best of a bad bunch in my mind.
Right. Speaking of exciting stories, Sundar Pichai of Google had a blog post this week where he's talking about AI, bigger than the shift from desktop to mobile, and it may be bigger than the internet itself. Isn't that an idea that is inevitably going to come around to us and hit us right in the head?
I think so, and I think we're struggling with the lack of really good growth themes out there right now, which is, again, is why we got so crowded and overvalued in this tech space. And look, I feel like maybe that case is overstated a little bit. I'll leave that to the experts to figure out. I think that it is, important. I think it's a productivity enhancer. We've seen a lot of company commentary come out and maybe not be as rah-rah cheerleadery, but just talk about how it is going to improve their business. I'm probably more in that latter camp. But the fact is, it's kind of one of the best growth themes out there that we have to choose from. I got that and reshoring, and that's about it right now.
What is your forecast about what happens with yields and how that impacts overall stocks? Because I think the surprise has been that, the 2-year continues to move closer to 5%, and the 10-year goes to the upper end of the range at 4.3, and that has stood in the way of the equity rally.
So I think when we see the 10-year yield move above 4%, it's psychologically very, very difficult for equity investors to wrap their heads around. And we've seen this time and time again. And in the past, a move above 3% was a big move as well. So, it's these big round numbers that kind of, when we have other reasons to be cautious, come in and kind of prick the bubble a little bit.